Okay, before we start, we have a disclosure, and please, it's very important to understand the risk and the management in the future trading. And if you're not uh, experienced enough, we strongly advise you to stay on a sim until you get the hang of it, because there is a risk in the future trading. We received a lot of emails to go back to YouTube and trying to guide some traders uh, about their trades, whether they are members or non-members. In the same time, what we will do, we'll try to cover the auto trades. In the same time, we'll try to pick up the signals, and we are sharing our signals for free, and we're not responsible for your trade. This live videos on YouTube is based on for education purposes only. So whether you are a member or you're non-members, we'll try to help you, guide you with your trade, and we try to uh, cover, even if you are an auto trader, you're not a manual trader, trying to let you comprehend what's going on in the market. Whatever decision you make in this trading, we're not hold responsible. Is a free sharing signal. We're not collecting emails. We're not collecting mail. It is. Uh, I have been busy last week, and we got a lot of emails for me to go back live on YouTube, trying to help the guys with their trades at free of charge. So you're not committed to anything, and it is not a trading room. It is just guiding you how to trade, or if you are in a trade, we'll try to highlight what's going on. In the same time, as you see right now, it is an entry signal automated trade. It comes with a three different automated trading, an ATM strategy, and then a fully automated. And I like the ATM because I can move my trailing stop or the target if I want to. For the guys, they're not interested, which most of the auto traders, they are not interested in looking at the chart. They're just interested in the number. Soon or later, they will find out they need to look at the chart, not just at the number. As an example here, we have an entry signal. This is the latest version, has not been released. Ninjatrader 8 has been driving us crazy. So sorry for the delay on this latest version, but it will be probably released within 10 days. Now you can see the sound. There is a new signal on the YM, and it is 247.36, and the target is 247.98. So as you see, it is fully automated, and now there is a new signal on the YM. So if we look at the YM, we have the automated trading has taken a trade. So if you notice here, the fully automated trading is taking a trade. And as you see, the fully automated trading is taking the entry. The trailing stops are based on a fib line. They are not, I do not use a dummy trailing stop. It is the worst enemy for a future trading to use two things: dummy trailing stop and some kind of weird chart called Renko bar. The Renko bar, there is rules how to use the Renko bar. They are superb trading for reversal retracement. But if you want to know the true identity of that market, you will never make it in this business with a Renko bar. That is guaranteed, folks. So if you're trying to be professional with that trade, or you want to be professional trader, this one here, we are using 1 minute, and we combine a lot of high time frame in it. But if you are really, you don't have the system, it's very fine. But if you want to really trade the future, you have to use the 1 minute, 3 minutes chart, and the 10 minutes. You need to enter the market on 1 minute and the 3 minutes to look at your higher time frame and the 10 minutes. So, and if you are an automated trading, that's very fine. But this system here, and we will cover some of the other auto trades. We are already on the swing trading and on the actually also on the scalping, and now this automated trading. As you see, we are already in this. Just been open for like what, half an hour. We have in the profit 212 ticks, 1700. So this signal here, while I'm entering this market, it was a new entry, and the automated is taking the signal, the trailing stop. There is an option you can use a trailing stop 1 and trailing stop 2. What is a trailing stop 1? The trailing stop 1, it is a minor support fib line. The trailing stop 2, it is a major support fib line. So once we hit the target, you will see, like the other videos, that there is nothing left in this market to take long or short. So what we do, we will help you, guiding you how, if you are a manual or automated, we'll try to spot the light on the market today, and we'll try to guide you or open your eye to some of the trades. And when we are waiting for a new signal, I will cover some of the other automated trading we have. So right now, the target, I'm using the full automated today, but tomorrow probably I'll use the ATM. I like to use the ATM. So if we notice on this target is already, the target is a 27.26.75, and on the YM we have the 1 minute is already entered the market, and then we are trying to climb to the 47.97. One of the things, most of the common mistake we find out about automated trading, that a lot of traders think that they can sit all day long, and you have to think about it this way, that you are sitting on a blackjack table. You cannot be sitting on the table all day long. So if, especially for automated trading guys, you need to understand that on a normal session you have around 4-5 trades for today, good trades, and the rest is just the market going back and forth. On a good day, very good day, you might can go up to 8 trades a day. For the guys are manual traders, they know that. The problem is with the guys are automated. They are expecting to sit down and automate it 24/7. That is not going to happen. It's not going to happen today. It's not going to happen tomorrow. It's not going to happen in your lifetime. We have to recognize the fact, and we have to realize the fact. Sometimes you will have the market is moving. Once a while, you can automate trading all day long when the market is really moving. But on a normal day, you should be, whatever time you are using, if you are in the US session, let's say you start around 8-9 o'clock Eastern time. If your auto trade, doesn't matter which auto trade you are using, if your auto trade has not made it until 11 or 12 o'clock, of course, there is another session in the evening, the last couple hours, but this is not the story. If this market is not fitting your strategy by 11 o'clock, if you don't see any profit, you need to hold on to your trading. You cannot be constantly expecting to make money 24/7, 24 hours a day, and then not risking losing trades. The reason is a lot of traders, they don't understand. It depends how this market is moving. Sometimes the markets are sideways. Sometimes this market is not moving. By you on an auto trade, it doesn't matter where this auto trade coming from, does not mean you are a market mover. You have no inventory. You are renting the ES from, or the YM from those market movers, which they are working against you. So you have to understand the risk in the future trading, and you have to understand once you hit your daily target, you should be done and over for today. That message has been felt, and constantly traders trying to keep automating, and that is not healthy. To sit down, you have to think about it. It's like you are sitting in Las Vegas on a blackjack table, and you are expecting to win every time we shovel the cards. This is not going to happen. The same thing in the market. What we are trying to do, we are trying to predict what this market is going to do. And when you are trying to predict, sometimes things, your prediction or your automated trading prediction is really not, sometimes it can go wrong. So today I will be covering a lot. And for the ones are in ES traders, if you are going long, for the ones that are not familiar with it, I'm not going to be messing up with the trades, but I can guide you to show you what's going on and trying to teach you some of the stuff we have. If we notice here, we have the yellow lines. Those yellow lines here, once this market goes in between those two yellow lines, that means all the trade going long is off. Again, once this market goes in, as an example, this is a YM and this is an ES. If we notice on the YM and the ES, those are in the yellow lines, and those, we have the same yellow lines to the downside. Once we see those yellow lines, that means you cannot anymore take a long trade. The reason is this is a critical area. And if we notice on the ES and the YM, right now is live, it's not a pre-made video. You can see they're both turn around when the market is between those two yellow lines. Now, on those things here in between the two yellow lines, it is for an advanced trader. I don't want to go through it on a YouTube live, but this is where, if you are an advanced trader, you can take a reversal and you're trying to catch those market all day long. So let's go ahead and trying to show you on the YM, euro dollar, and the euro dollar also is on the 1 minute. And if we notice on the ES, we have the reversal. Once it hits the reversal, there is nothing left, and we are away from the target around a couple of 3 ticks. So when the auto trade is having the trade is around 26.75, and we came into 27.25.75. You can close that trade because of those yellow lines, but in the same time, if you want to stay on that trade, you can stay on that trade. The same thing on the YM, we have the reversal, and then we can see the reversal around 47.82, and now we are sitting between those two lines. That means it is a critical area. So let's look at some other market to see. We have the ES and the YM, and let me try to find the mouse. And let's look at the Russell. Let me see, what is the Russell? Okay, here is the Russell. Again, you can see once with those two yellow lines coming in, the market struggling once it comes into those, between those two yellow lines. But the automated trade took a trade at 16.22. And the target right now is 27.5, and the other target is 16.39. So let's look at this market and trying to figure out which direction this market is taking us. For the euro dollars, also it's the same story. You have the entry price on the market analyzer, you have the target, you have the P&L, and it is based on 10,000. The market analyzer is based on one contract only. Another thing is if we take the euro dollar, we have a sell entry. Actually, it has to be below the 79 level before we can take the short entry on the euro dollar. We have the sell entry at 791, but because the true average price, I think I will take it a little bit below the 79 level. So let's keep looking at the ES, and let's see. We have the DAX. We have the 30-year Treasury bond is moving very well today. And we have the NASDAQ has already hit the target. NASDAQ entry was 69.13. And the re-entry is 69.14. The entry price is 69.0975. And then the target is 69.24. And then the PNL is 455. So let's keep our eye on those trades. So if you are thinking about taking a long on the ES, it's a bit late to take a trade on the ES right now. You have to wait for a reversal, or you have to wait for the automated trading taking a signal, a new signal to the short side. I want to show, while we are waiting on the ES and the RTY, the Russell and the YM, I'd like to show you the difference between a time frame I like to take the DAX. For the ones who like to trade the DAX, for the DAX trader, usually I start on the DAX around 5 o'clock Eastern time. And if we notice on the DAX, this is a 150 ticks chart. It's a very small chart, actually. We took one trade at 517, and it was done. We hit the target. The targets on the swing trading, okay, we have a new signal on the Aussie dollar, and then the entry price is 513.7. Also, we have a new signal on the 30-year Treasury bond. The sell entry is 140.20. The target is 140.10. Now we're about to close. We're about to close the ES. There we go. There is a buyers coming in. What is nice about this auto trade is not like this auto trade is taking all the trade back and forth. This one here, if there is a long trend, you're taking one trend only, one, and then we have also a new signal on the Forex. You can see where it says a new signal. And let's keep our eye on the ES and the Russell. And then if you are thinking about the institutional trade, this is the institutional time frame on the DAX. But first, let's cover we're still missing one tick on that trade. we have 27, 27.75. What is nice about is the same entry, but what is nice about the ATM, I like the ATM more, because on the ATM is the same entry signal, but like those situation here, I can move my trailing stop, or I can move my target one tick below and close that trade. On the full automated, if you do that, let's say you want to put it here, it keep going back. If you notice, keep going back. But on the ATM, you can manage your target, or if you want to close it one tick below or one tick above, which we have this option on the fully automated, that you can make it one tick below or 5 ticks above the target. You can do that. You can give that auto trade that setting and will do it. But I like that the ATM, because I can move my trailing stop, or I can move my target. Maybe I want to move it one more tick below. As you see right now, on one trade on the ES, the signal came in around 10 o'clock, and there is a new signal also on the British pound, the Forex. So this is one thing that I like about that, is when you are taking a long trade, is the auto trade. This one here is going to take one trade long, and it's not going to take another trade until the direction or the trend has changed. So during this time between long and short, the market goes sideways. So if we look even on trying to find something here, this is a really, if we notice this area here, this is a really bad news for any kind of auto trade. And then the market took a spike, that's fine. But in those area here, usually this is where the most auto traders struggle. And this is where it causes a lot of aggravation. So on that one here, once you hit the target, you are avoiding all those sideways or flat market. And then if the market changing the trend, you are taking a short trade again. So between the long and the short, you are avoiding all those nonsense movement. So that's why I like this one here. And I like it because it's more technical than it's just a normal blind auto trade taking left and right trade. Not unless if you are using a higher time frame. As an example, if we want to use an institutional high time frame, this is an institutional high time frame. It is a 15 minutes. On every, doesn't matter which platform you are using, this is the institutional time frame. When we are using a 15 minutes, we are avoiding all those noises in the market, and we are avoiding all those sideway, where if we, as an example, we take the 150 ticks, and it is both of them from today, we can see it is really important for those traders to understand that this is the area. This is a very, very bad for any kind of auto trade. And then when the markets took it, and then if we notice here, we have a very flat market right there. Anytime you try to look at the chart, whether it's a minute or 150 ticks, they're practically almost the same. But you can see there is sometimes in the market, there is a lot of sideways. One of the things you find, once this market spikes, the market goes flat, because we have no idea what time that market is going to ignite for today. So if we are looking, it is very important to understand between those high time frame and a low time frame. This trade was taken from 7:15 a.m. If we notice, it's only going one direction. It's cutting all the noises in the market. If we are taking this one here, It took that trade at 514 because it's a smaller one, and we were out at 623. So it depends is how you want to play that game with the future trading. There is losses and winning all the time. Let's look at a different time frame. If we look at the 1 minute, I'm taking the DAX because that's what happened in the morning on the DAX. And if we look in at the DAX, the first trade was 418, and we were done around 524, and there is not much money in there, and we missed out. You would have made money here, fair enough, but then you would have give it all back here. And this is really the most struggling area. We are struggling. Everybody is struggling with automated. That if you are running the 1 minute today, you would have made on that trade 562, very fine. Then you probably get another $500 between here and there, very fine. And then maybe another $300 there. But then from 6:28 early this morning Eastern time, most likely you would have give up all your winning and then start making money again here. So you are on a really wild coast ride here. And then you would have, if we notice, this is really, guys, really, I mean, I know auto traders, they brush everybody off, but you have to understand that you cannot auto trade 24/7. And this is what I'm trying to show you, that from that area to that area, you can make a tons of money, but then you're going to give them all up again. So there is nothing called 24/7, guys. Please, it's not. You have to be a little bit comprehended that once you hit your target, you have to call it off. Because if we notice right now in this market here, it does not go one direction. It goes back and forth until it hits the target. And let's try to look on a different chart. This is the 288 ticks. We're still waiting on the ES, so I'm sorry, this is an 8 range. Took one trade. This is really nasty area. Then you have a good trade, and then a very nasty area. So if you want to learn your auto trade, whatever that auto trade you purchase it from, if it's not all the time your auto trade working or non-working, of course you have to have an auto trade is consistent, but also you have to understand why that auto trade make money today and why that auto trade did not make money. It is really important to look at the movement in the market. So let's see what else we have here. Actually, the market dying on us. Let's see. There is nothing right now. Let's look at the CL. Where are we on the CL? Okay, we have a new entry on the CL for the CL traders. There is a lot of buying, new signal, new entry. Look at this one, guys. The new entry is 7208. Fair enough. This is the new entry. And if we notice why this market is struggling, because we have a resistance line at 7210. So they are 2 ticks away. For the ones are or have not took any trade on the CL, keep your eye on the 7210 because there is a heavy resistance line at 7210. So if you are thinking about taking long, try to put a limited order at 7211 because right now, if you are taking that trade, if you are a manual trader, that you can be having a problem to go long, and it's not short either. So be careful. I'll try to guide you on this one here on the CL. It is really extremely. We have a new also. We have the Euro British Pound, a new signal right there. You do not have a short on the CL, and if you're thinking going long on the CL, be careful. You need to see the CL is at 72.10. 72.10. It is a heavy resistance, so think twice before you take a long trade in here. If we want to look at the ES swing trade in 1 minute, we had the entry at 9.56, and you can see we're about to hit the target. Okay, you can see the buyers are coming here. Let's go back. The CL is struggling. Let's go back to the YM. Oh, the YM, we're done with it. Okay, target hit, finished. And now we are fixing to nail the $300 on that trade. And it's over. There is no more long trade on the ES, folks. We hit the target. The Autotrade took that trade at 27.29.25. Very fine. And now the automated trade is not going to try to get into those trades until we have a different direction. So this is really good. And nailed 300 something dollars on this one. And you should call it off for today. And this is what is nice about it. You say, I'm done for today. You got your trade, and I'm done, because right now, at this moment, we are on a very, very critical area right now to take any long trade. We have a new signal on the Euro Japanese. And if you're looking for the entry is right there in front of you. 130.718, the target 130.87. It's right above this dark color, and it says where is your trailing stop, and it says where is your trailing stop to, and it's telling you buy signal entry, and you can follow that trade. So now we still have the Russell. Let's see if this Russell gonna do it. So on the let's look at the Russell on the swing trading 1 minute. This one here is an entry signal. Let's look at the Russell on the 1 minute. Let me try to find it. It is practically the same number. Oh, there we go. It is the Russell on the 1 minute. Even if you are swing trading, you can look at the entry signal, and there is no more long trade on the ES. If you are long trading on the ES, you're done. I mean, you should be taking cover or flatten out your position on the ES. You are on an extreme area that actually, when you are trying to take long here, most of you amateur traders, they're trying to take a long trade in here. It is actually, you need to start looking for short trade. Yeah, it is funny, but never the market work in the magic way. So this is where, if you have whatever tools you have, or maybe one day I will try to cover how to reverse the market. But I don't want to confuse the traders. I'm not going to be reversing, but I'd like to show you something here. We have a reversal on the RTY, on the Russell, and it is in those two yellow lines. This is where the critical area, and this reversal is not a repaint reversal. Again, those are not repaint reversal. You have an R4 and an R5. That's mean reversal 4 and reversal 5. Those are, the higher the number, the stronger is the reversal. So right now what we can see, the target is at 1637. Today I'm using the automated, and I like to show you how handicapped I am when I'm using a fully automated trading, because if I'm not using the fully automated, I can use the ATM, and then I can start moving targets if I want to, or if I want to increase the target, I can increase the target. So on the fully automated, we cannot, but I will show you. I will try to activate the fully auto ATM. It's taking the same trades, the ATM, and the same entry, the same signal on the, like the fully automated. But those cases, like now, like if you are missing one tick here and there, I can drag the sell position or the trailing stop to trailing stop 1 if I want to. I want to cover my profit. So this is actually enjoyable, because you're not making a decision. You just, everything is right in front of you on the chart, and then you can decide if you want to close it off. One of the things, guys, you still have to be a little bit sentimental. Once you see you hit your target for today, whether it's a little money or a lot of money is irrelevant, because there is also tomorrow. So you could be making $200 today. Fine. Or tomorrow, the movement and the market is different. You might wind up making 700. Doesn't matter, as long as you're not in the red. Being in the market constantly, it is going to make you lose money. It's not going to make you more money. If we look, the reason I'm insisting on the 1 minute, the 1 minute, it is the most effective chart. And if we notice on the NASDAQ, we have the NASDAQ on the swing trading, took the trade at 1014, and we're still on that trade. So 1014, this is not bad, and it's still on one trade based on 2 contracts here. But on the automated signal entry here, we are using only 1 contract on that. For a reason, I don't like to confuse the traders, but for a reason, I only take 1 contract on the entry signal, but you can take as many as you want on it. But now for educational purposes, we're only going to be using one contract. If you notice here, guys, a few minutes ago, I said no more long trade on the ES. And if we notice now, we have R4 and R7, reversal 7. Those are not repaint reversal. And then we are in those 2 yellow lines. Those are the most critical area where you do not take long. Even if you are auto trading, you can direct your auto trade to take short if you want to, or you can leave your auto trade alone. It's very fine. But there is no more trade long on the ES. We are on a very overdue pullback on the ES. And if we notice right now, nothing is going to happen on the ES. is going to drive you crazy in that area. So be careful with that trade. Russell is still kicking, and we'll see what will happen on the Russell. Let's see. The NASDAQ on the entry signal is already hit the target. Actually, the market is very flat. Not much going on right now. Pullback. One of the things that traders, probably they have a million different system in their hands. But one of the things is, I've been using this for over 20 years, and it is a very simple method, and it is confirm your trend, pull back, re-entry. And sadly, not too many people follow. I hear all the time people has to follow the rules, and this is a very famous word for, I'm not trying to attack anyone, but for a trader room, this is their magic words. Honestly, in my opinion, there is no rules in the market. You cannot follow anybody's rules. You cannot follow my rules, because the market really care less about your rules and my rules, because every day there is a new rules. The things is, after many years, you will understand you have to have a little bit elastic head to be updating with the market, and there is nobody's rules, that's for sure. So if I have a funny indicator, the market is not gonna go follow my indicator or your auto trade. But what we can do, we can predict every day's market, and especially for the auto traders, I don't want to teach them price action, but let's say I'm auto swing trading on the NASDAQ. Very fine. I don't know. I have no clue. Should I close that NASDAQ or should I open it? I'm not no technical guy. I have no clue. Very fine. I'm not asking you to be a brilliant trader to determine when you're going to close that position. No. But at least I can look at few things here and there without having any knowledge. I can practically predict where is this market going. As an example, this is a 1 minute swing trading. On your left chart, it is a 1 minute entry signal. On the entry signal, automated trade is more technical. On this one here is just shooting a blind. So what is my prediction on the NASDAQ if you are a NASDAQ trader? Again, if we said those two yellow lines, because I don't believe in overbought, oversold, what about supply and demand? What happened to it? So all those nonsense indicator does not make sense to me. But I can predict from the previous days where is the high and the low high, and where is the resistance. And I don't want to confuse the traders between 30 minutes chart and 10 minutes and 15 minutes and 3 minutes and 1 minute. I mean, we all sometimes don't have the head for it. And but at least I have two yellow lines. It's telling me this is, buddy, you need to start pushing the brakes. It's very simple, plain English. This is the area where you need to consider closing position. We have seen that a few minutes ago on the ES, we have seen it on the CL, we have seen it on the NASDAQ, we have seen it on the Russell. It never fell, and it will fail sometimes. I'm not saying it's going to be all the time. There is nothing called never in the market, because the market goes in a different direction sometimes. But this is another example on the NASDAQ. I'm swing trading, and on the swing trading here, we have the buttons. We can pause it, do not. We have one guy. He paused the auto trade and went out of his home. And then the guy called me back and say, Sam, I paused this chart, and something did go wrong. When he clicked on pausing the chart, he was really thinking by pausing that button that the United States stock market is going to stop for him because he stepped out of the house. Honestly, he thought he is stopping the NASDAQ movement, honestly. And I did not know if I need to hit myself with a shoe or I need to cry. But if you are on a trade, please do not pause. This has happened for the last 7-8 years, happened 2 times to 2 different time traders, that they need to get out of the house, that they pause the auto trade while the auto trade is in the trading. If you pause while you are in the trading, that means you're telling the auto trade not to close position, but it does not mean your NASDAQ is going to stop moving until you get back. NASDAQ is not going to wait on you until, sometimes we have some kind of problems you never thought about dealing with. So right now, if we are looking at this NASDAQ, we can see on the 1 minute, I'm swing trading on the 1 minute. This is my technical chart. It's telling me I am in a critical area. Should I close? You can close and then say, you know what, I'm done for today. I am not going to sit on that blackjack table and go for another round. I'm probably going to be losing money. The same story here in the stock market, folks. You cannot be sitting on the table 24/7. So this is the critical area. If you are greedy and aggressive, we have one line called 69.51. We are above that. We're not going to argue. We have a reversal telling you, giving you sign that the market is really running out of steam. We have a target, because those targets are not fixed, it's based on the market movement. We have a target at 69.65, and we follow by 69.68.75. So what is the story telling me? Very simple. We have a resistance at 63 level. We have a resistance at 65 level, and we have a resistance at 69 level. That tells you there is a 3 walls. There is a new signal on the British, on the US, Japanese, and the entry is right in front of you, right here, where it's in the dark. The entry price is 110.89, and this on the pullback re-entry is 110.72, and the target is 110.98. So I'll take this line lower so you can read those numbers. Can I predict what is going on in this market on the NASDAQ? No, sir. I cannot predict no more than saying if you are on those any long trade on the ES, whether you are using our system or not, you really need to consider closing position nothing above the 96.61, and there is no more long trade on the NASDAQ. No more long trade on the NASDAQ. So, or for an advanced trader, you can close that position from that button, and you can direct your auto trade if you want to, because most of the auto traders, they don't like to do anything, but fair enough. But for the advanced trader, if I see that market here is in a critical area, maybe I will close that position. If you close that position, you're not going to turn off your auto trade. It's just going to close that position. And if you want to direct it to short trade only, that will be a genius idea to direct the the auto trade to the short trade, because there is nothing called long trade anymore on the Nasdaq, at least from now to lunchtime, 12 o'clock Eastern time. So it's nothing gonna happen, not unless something out of the blue moon, some kind of news is gonna have a huge impact on the market, and that is a different story. But from there is two things a trader should know. Are you technical trader? A technical trader should not be affected by the news. I mean, the news are okay to consider what's going on, but stay on the technical side and move your feeling away with the numbers. The numbers does not make any sense when you are technical guy. So to me, I'm going to dismiss the 96.1, so I will not mess up the auto trade. But if you need to close position, you need to close position on the Nasdaq. Nothing above the 69.61, because we are bumping into three different walls, and those walls are very thick, and you're going to see the market is going to die on you. So be careful with your trading. And let's look at this market and see if put your short, even for a guy needs to reverse the market. Yes, sir. It is. If you want to reverse this market, it's going to be somewhere around 66.75 reversing this market. 66.75 reversing this market. The reason is why we need to reverse this market around this level, because you have a target. The target itself is a resistance, then followed by a major resistance line at 69. When we have a double, that's mean we have a retracement or a reversal. So we got to be careful on that. And let's look what's going on the ES. I'm sure there is nothing on the ES. Let's see. Look, guys. Look. So for those guys are traded the ES, they really have not done any substantial movement in there. And you can see how the ES is staying in this line. We already hit the target. We're done. So you can see, if you rewind that video, you can see you have not missed anything on the ES once you hit the target. It just kept you out of trouble, because this area here, when it's a flat, that can get any auto trade in trouble. So let's go back on the Nasdaq, monitoring for the Nasdaq traders. So let's look at it. Let's look at the CL in the meantime. For the CL traders, if I find anything, wait on the CL, folks. If you are a CL trader, we are in a very... Look, guys, this is your automated trailing stop too. If we look at the CL, hit 1 time, 2 times, 3 times, 4 times, 6 times, 7 times on the same trailing stop. The trailing stop is a fib line, major support line, trailing stop too, and you can see exactly where the CL has stopped. So be careful with this CL right now. If you are deciding to take a trade, it's going to be very, very critical area to take it. Consider short once we go below those lines at 71.82 or 71.80. Consider short trade on the CL. Anything above the 71.84, if you wanted to take short, go ahead, be my guest. But it's not gonna. You're gonna be on a very, very high risk trade on that one here. Let's look at the YM. Look, on the YM, we're still on between those two yellow lines. Look at this. Nothing happening. It's just a flat. Let's look at the Russell. We're about to close that trade on the Russell. I want to stay on the NASDAQ, and I want to show you that if you want to take a short trade, take it from the 67.75. There is a huge resistance above those numbers. A huge resistance above those numbers. So be careful with those guys. Okay, we have a new signal right there, right above this gray color. Here is your entry, 182.4. On a pullback or retracement, 183.09. Your target is 1808.4. So let's look at the. I'm with the forex. I only like euro dollar. To be honest with you, I'm not interested in anything. Not. I like euro dollar. The rest is not my piece of cake. So I'm sure there is a lot of traders enjoy the take this one out of the way. Okay, watch the NASDAQ, folks. If you are thinking taking long, think again. You're short, or if you want to close position, close it at 66.75 and reverse at 66.75. This is just a suggest. We're not calling the trades. I'm just telling you that if you are on a trade, you need to consider start closing position. And if you want to reverse, this is a very good area from 6,700 to reverse, if you like to reverse the market. But either or either, there is nothing above those area here to take a long trade, at least from now to lunchtime. You should not be taking any more long trade on the NASDAQ. For Thursday, usually it is a very good day on Thursday, but today the market is really, really, I mean, this is one of the best days, Thursday, to automate trade, but there is not much going on, really. The market, it's just sitting on the side in a way, and there is nothing we can do with that. Let's see what else we have. We have a new signal on the Forex. It's right there, right above this gray color. You can see the entry price, target, pullback, re-entry, and the market analyzer here based on 10K. You can see the PNL say 10K. Here, the PNL on the future based on one contract. That's why you see one only one. Okay, you see, guys, the NASDAQ right now. And if we notice, the Russell is also between those two yellow lines. That is telling you right now that this market is running out of steam to the long side. It might go a few ticks here and there, but if we notice on the Russell from 1037 until now, it's been a flat market. If we, especially for the auto traders, because they need to know why. If we notice on the ES, and this is a 1 minute, I mean, it's nothing. This is a very small time frame, and you can see it's dancing around the 2730. So when you're taking a live trade on the 2730, that can drive you crazy whether you are going short or long, and especially when it's staying within those range here at 27.30. So if you rewind that video, you will find we already hit the target, and we have not missed anything. The target, the automated trade, sit at the target and take that trade with the trailing stop and the fib lines. So you don't have to do anything to those trades. Okay, now there is a selling coming in, you see? So that's why I'm so glad I told you not to take any more long trade on the ES. Here is the $1 million question. This is where, if you are taking reversals from those yellow lines, you are in a good shape right now. If you're not a reversal man, you need to practice a lot for reversal, because this is a little bit, you have to know what you're doing. But let me show you a trick. You know, I promised myself I don't want to teach trading, and then I wind up always. Let me show you a trick. To understand, we have a new signal, British pound, US dollar. Look at this one. You see this line? Can anybody see this line? Oh, I'm sorry, I have the chat cut off, but let me put it back. You see this line? I'm going to cover it with the red. Look at this one. From that line, the farther the bar is, the stronger the trend is. So when you have the bar R far from that line, this means it's a strong trend. That indicate on a pullback re-entry, you are on a very good hands, because this is where your entry, because the bars are farther away from your line. This is a perfect entry right there, because now you understood it's a strong trend. Then right there, we are very far from that line. We are still on a strong trend. Extreme strong trend. Very nice strong trend. Where is the problem with the traders? When those bar break that trend. That indicate the trend is over. You see, it's a very simple and very effective. So this is a fine line between reversing the market or comprehend there is a pullback re-entry. So this is a really, most of the traders, they make mistakes in those area, and there's most of the losses actually coming from those area here. So that's why if you want to study the ES right now, we have 3 important numbers, and this is 1 minute, not one of those weird looking charts. The 1 minutes indicate the true trend. First of all, we have that line. It's coming to the 27.28. What we have after that? We have the trailing stop one for your automated trading. The trailing stop one is based on fibs, floor and fibs. We have follow the ES by adding a new signal, 2727, a re-entry, pullback re-entry, followed by trailing stop 2 is a major support line, and it is 272625. Okay, so if you are taking a trade right now on the ES, or you are automated trading, watch those three numbers, those three magic numbers, and you will see how your ES working like a clock. I'm gonna put it right there. The same story on the Russell is coming to the re-entry. Look, you see the same story, and we are coming to the re-entry. So what is indicating here, this is a very fine line for those guys that like technical stuff, not just automated. So when we are taking a trade here, most likely on the pullback re-entry, which has been, it never ran out of style. I've seen so many systems coming in, within 2 years they ran out. This has been around for over 25 years, and it never fell and never ran out. And it's all drawing right there in front of you. The system is giving you all the numbers. We don't need to come out with any magic numbers. You don't have to do any drawing. You don't have to look at anything except few lines and a fib line. So this is where the probability of a retracement is right there in this area here. Anything above the 27, 26, 25, we still in a long mood trade. We are not in a short trade. Absolutely not. The reason is, if you are scalping, that's a different story. But if you are trading, if you are taking short right now on this ES, oh boy, you're going to be having to deal with 3 thick walls right there on the ES. 3 thick walls. And this is not a pre-made video. This is a live. And you can see it yourself that once you understand this market, the market works like a clock. And once the ES is going to take a lot of sellers to penetrate those lines on the ES. If you are an ES trader, it requires a lot of sell, and it requires a lot of stress on the ES or some kind of major news to break all those lines. As long as we are looking at it from the technical side, we have a new signal on the gold. Okay, is the entry price is 1288. Your target is 86. It's really nothing. Sell. I'm sorry. Okay, a sell. And let me look at the gold. Okay, we took a short trade on the gold, and you can see here is the gold. The automated took that trade. Look, this one here, if you are a gold trader, you have 3 lines. It's going to be troubling on the way down to the target. Your lines are 87.1, 86, and 86.6. This is going to give a little trouble on the way down, but depends on the movement. We will see what will happen to the gold. Notice the same story happened on the Russell. Come in and look, what is holding it is your trailing stop 1, which is your support area, and then followed by another support and followed by another. So you can see where sometimes this market really struggle, and you really cannot figure out if you need to go long or short. In those critical area, whether you are automated or you are manual, you have to keep your eyes open to those area, because uh, this is where most of the traders struggle when they are short and blind. Whether you are automated or manual is irrelevant. The market has to go through those numbers. Those are technical numbers. We cannot avoid them. And look at it yourself, and you will see. Look at the ES. There is a sellers coming in. That's why you see the blink in here. Sellers coming in. Watch. Last roll. Sellers on the movement. Look, where is the ES? This is your first defend line, 27.27. Look at this. Look, where is the ES? It works like a clock. Once a trader is knowledgeable what's going on in the market, he can auto trade, he can manual trade. And it is enjoyable, actually. If you don't know what he's doing, it could be a nightmare. So here's your ES to the tick on 27.27. This is not a replay. This is a real lifetime data. Notice on the Russell, it's the same story. When the Russell came down to the first defense line, the support line at your first trailing stop, it is a minor fib line. And then the second one is your re-entry point at 16.25. And this is your last defend line. It is 16.25. So there is three thick walls before we can go short, whether you are automated or you are a manual trading. But it is very important knowledge to understand how the markets move, and to understand why that trade I made money and why that trade I didn't make money. So if we notice on the ES, to the tick, folks, look at this, to the tick. Again, if we notice, if you rewind that video a couple of minutes ago, the farther this bar away, the stronger the trend. Now we are touching that trend that indicate the market is going to be in a really, really mess sideways in this area here. The market was very generous, giving us from that area here to 27.18 all the way to 27.28. But the party is over once we broke this line, and now the sellers are pushing it. So let's see how well this sellers look. Watch it. Now we are on the re-entry. It's 27.27. They are pushing it. They want to break those levels. Keep your eye. It is a game. It's a war game between your account, somebody else's account. Look at this. You're trying to grab somebody's money in the trading. For every winner, there is a loser. Look at this. It's a blinking. I don't want to deal with the numbers. I use the blinking because I don't need to read the numbers that extract me from the first bar. But when it's a blinking, I know there is a sellers trying to push this market down. Look at this. Then if we break that trade, we have the 27.27, and we have the major one, 27.26. They're all right there. And this is where it's going to cause confusion for a lot of traders. And this is where the area a lot of traders are losing money. So if we notice the first bar, the second bar, the third bar, and we are still on the first defense line. I'm trying to simplify it, guys. This is your first defense line. This is your second and your final before we decide to take short. So we have 3 defense line, and this is the way to simplify what we're looking at. Let's look on a different market while we are waiting on that. Let's look at the 30-year Treasury bond. One of the things also is very nice if you are an ES trader. Does not hurt to look at the 30-year Treasury bond because they works the opposite direction. And sometimes if you look guys, look at the ES. We have a new signal somewhere. I didn't see it. I really didn't see it. Look where's the second defense line. This is your re-entry point, folks. Look. This is your re-entry point right there. Look at this. Can you see how this market driving everyone crazy? But once you understand what's going on in the ES, so jumping in the trade, you need to wait. And this is the secret about the trading. Look at this. Here is your re-entry, buy, re-entry. Look, what happened to the sellers? They just misled you. And there we go. Start taking off again. It works like a clock. This is where the most confusion when you are automated or you are manual. So go back what we have done the drawing. What we can see now, after we have done the drawing on that ES, we showed you when is the market farther away from that bar, from that moving average, and when is going to collide with that number. And now we can see again, the farther away, the stronger the trend. And now look where they are cutting each other right there. So very simple. Now, what we should do, sit on the side on this area. If you did not enter the market on the re-entry safe buy entry, that's okay, because it's okay. You should not take any trade, and you should not take long trade here, because now we are in the middle of a turbulence, and we should not be taking a trade. That's why we put this line for you to re-enter the market. And your stop loss is not a fixed stop loss. Your stop loss, here is your buying right there on the re-entry. And always your stop loss is below the trailing stop. Below the trailing stop 2. Why? The trailing stop 2 has to be in front of you, because this one is going to protect you for being not knocked out the trade. And a lot of mistakes that traders do, that they use fixed stop loss. I don't understand fixed stop loss. You cannot say I use 15 ticks, because in some cases you only need 5 ticks. In some cases you need 12 ticks, because it's not one size fits all. So I'm always trying to use my stop loss somewhere, be protected. It's like you are leaving $300 in a supermarket and expecting not anybody to pick it up. So we need to protect our entry right below on the safe re-entry point. We need to put stop loss right below the trailing stop 2. You do not use stop loss and protected as an example right there. This is really bad because it's guaranteed you're going to be knocked out. A little movement, because also on Ninjatrader, there is a lot of milliseconds you don't see on your bars. Sometimes those milliseconds you don't see on the bars by sales and bid. So you do not use stop loss and protect it. You always have to hide behind the fib line, below or above, depends where you are. And because then you increase your trade by, over 50% on that trade. So this is the story on the ES, and you can see that helped us not taking short on the trade and telling us when everybody trying to go short, we know we need to go long, and it was at their re-entry point. Okay. Let's look at the Russell again. The same story on the Russell. The market pulled back, came into the first defense line, and that's why I like the ATM, not the fully automated, because I like to take it maybe right here. But on the fully automated, it's going to go back. You see that? You can use the ATM strategy, which is the same entry, the same target, but it gives you the option to move backward and forth. I mean, you can move your trend stop, you can move your target. I don't like to stay in a trade that long because right now everything is off. You should be in and out of those trades, in a reasonable time. I'm going to stay a little bit longer. So we're just waiting on a new signal. It's really not much movement on Thursday. I was expecting much more today. Let's look at the 30-year Treasury bond while we are waiting on. There is nothing left on the ES. If you did not re-enter the market from here, there is nothing. Let's look at the. Okay, we got a new signal. Let's look at the 30-year Treasury bond. We have a support line at 4012. You can see how there we go, sellers. Watch out for that support line, 4012 right there. And then once we are done with that, you can get a couple more ticks at 4010, and there is there is nothing left. It is a reversal from that area. It's followed by a major support area. And again, the same thing apply on the 30-year Treasury bond. This is a 2 yellow line. This means there is no more short trade. And this is where you need to start reverse this market. You need to find your own self. I'm not allowed to do that, but you can try to find an entry on a reversal, whatever you can afford on that one. Not much going on. Trying to find anything we can enter the market. There is nothing really. Let's look on the ES one more time. Nothing right now. If you did not enter from that area here, the 27, there is not much to do. It is a really critical area, but this is the re-entry open. The market is practically dead right now. Let's look at the gold. We had a trade in the gold. It's very flat. Nothing. YM. We're still the same story. After we came in between those two yellow lines, came into the support line, the first trailing stop, nothing happened. 6E. Not much going on. CL. Look at this. Also CL came in between these two yellow lines, 72.35. The target is 72.43. Now we have a pullback on the CL. This is very interesting one on the CL. Your re-entry point is 72.10. This is for educational purposes. We're not calling you trade, but you need to do your own training. But at 72.10, we have a major support area, and we have the signal on the re-entry at 72.10. Look now, look at this. The ES is going back. It's been a while trying to penetrate your first defense wall, and now we are going to the second support line. It's a safe re-entry. Now there is a sell coming in. We could have a new signal very soon. Let's see the market turning around. There we go. A lot of sellers. Okay. Now this is your last support line. It's 27, 26, 25. We're not going to go short until we penetrate that number. Again, folks, if you are trying to take short on the 20 on the ES, please wait. Decide which number you want to take. Is irrelevant, but wait. Make sure that you are below the 26, 25 on the ES. There we go. There is a lot of sellers. It's gonna break it. It's gonna break. There we go. It's gonna break. Look where is this ES stopping? Right there. 27, 26, 25, right there. And there is a lot of sellers trying to knock out that number. Let's look at the NASDAQ or YM. Okay, the same story here on the YM. Here's your re-entry price. What is nice is what we are trying to do, we're trying to predict the market, whether you are automated or manual, but we're trying to predict this market. And this is your last defense line. It's right there. 20 is your last support line at the moment is 26.25. Look, they're trying to push that number. They're trying to sell it. You see how blinking it is? A lot of sales coming in. We're about to have a new signal, automated trading. We're going to have an automated new signal. Wait till it breaks the 27, 26, 25 if you are an ES trader, please. And then there we go. A lot of push on the YM. Okay, we're about to have a new signal on the ES. New signal on the ES and YM probably. Let's see. There we go. We're about to have a new signal. On the last signal, if you rewind that tape, when we first started the session today, on the last signal, we made a little over $300 on one trade. And if you notice, that signal entry did not, when the market is sideways, you see this? This is where most of the auto trades lose money, those area here. And it's been a while since 11 o'clock. We are on a very straight line. So if you notice on the entry signal, we entered the market, made 300 something based on one contract. And what is nice about it, you are avoiding all those noises in the market, yet you are trading a very small time frame, is 1 minute. And now we are waiting on a short trade. And look, we're still on the last defense line. For the ones that have been here for the last hour, whatever we said, or on the previous videos, whatever we said has been done. We have been predicting this market almost 90%. What I like from my member to recognize what's going on in the market. We have a lot of emails from non-members asking me to go back online. But it is very important to understand when we are auto trading why that auto trade makes money. We don't want to teach price action, God forbid. I mean, we don't want to put in a guy auto trade on a price action and put him in the room for 1 year trying to teach him. No, 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 no. But at least look at a couple lines and try to understand movement. Because one of the things with automated trading, you have to understand how this market moving today. The same story if you're trying to go buy a car, you go around, you kick the tires, you try to go around the car, you want to have a feeling on it. And the same thing here. I mean, you need to go around the market to see what's going on in this market. Is it flat? Is it the market out of range? Is this market got stuck in that channel? I mean, this is just basic knowledge. And then we say, okay, I like the movement, or try to use your auto trade on a sim for a couple of 3 trade. If you don't know how to read the market, use a sim account on your automated trade and see the first couple of 3 trades, how is it going, and then decide if you want to go live or not if you have no clue how the market moves. So what we notice right now, it came in on the first defense as we explain it to you. This is your first support line. And this area here is the most critical area where 50% of the traders lose money around those areas. And because there is a turbulence right there, and we have explained the trend, and we explained the bars, and we are on the first support line. The market came in, kept flirting with that number until it got broken, then come back here, flirting with that number until it got broken. And then this one here, it was the final turning point for the ES to go long or short, which sadly at the moment I was hoping that to break that number and get a new signal. But the last support line was a very strong hold here, and the sellers were not able to break that area here. Are they going to give it another try? Yes. So you got to be patient with your trade, sir. Trading is not an easy money. It's a very hard money. You have to understand what's going on in the market. I wish it was easy money. We have to have a little knowledge, folks. So now we are waiting. It is really hard today. I was expecting Thursday to be, we have a lot of movement on Thursday, but today, I mean, this is our luck for today. Okay. Nothing. 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 We're still on this Russell, and we've been on this Russell, what, for over an hour. Let's look at the CL. Okay. Maybe we'll have a new signal soon on the CL. I'm trying to pick up a signal for anybody out there. Okay, look, on the CL it's the same story. We are on the trailing stop 1. This is a minor support. This is your third hold, and this is your last trailing stop 2 is your major support. So it is not hard to understand those 3 lines and the yellow lines. They're not hard. You can learn them in 1 day, 2 days. So for those guys that want to auto trade, they are very important to look at those 3 lines. We're not asking you to be a brilliant trader, but at least look at those lines, because that tells you why that auto trade. I mean, you know, management and timing for the auto trade is factor. You need to understand it, but also trying to recognize 3 lines is not hard, and trying to understand when the market go into the yellow zone, that means there is a dangerous area here for your auto trade. Maybe you want to consider directing the auto trade. If you don't want to direct it, You don't want to touch the button. You don't want to get your hands dirty. We understand. You don't like that. But at least if you don't want to touch anything, that's very fine. Keep your hands clean. But at least try to get those three lines, trying to understand and instead being aggravated why that auto trade didn't make money. Why? Well, sir, because your auto trade took an entry right there, and there is a three major area here where it's going to cause in this market to go sideways. It's irrelevant what kind of auto trade you're using, whether it's a banana auto trade or it's an elephant auto trade. It doesn't matter. If this auto trade trading with the trend, you're going to be struggling here, despite what kind of auto trade you're having. Now we have the sellers, so let's see if we can. I'm trying not to close the session today until we get a new signal. So, okay, this is the last stop on the CL. Look at this. So I'm not showing you only ES. I'm not only showing you NASDAQ. I'm showing you NASDAQ, ES, CL, 30-year Treasury bond. They're all on the same pattern, the same problem, the same areas. This is where the market is going to struggle. This is where the market is going to kick back. This is what is retracement. This is where is a reversal. And you don't have to do anything. You just look at three lines. Look at this, folks. The CL came into the last stop, the last wall. And now let's look. The sellers are pushing it. And this is the turning point on the CL is 71.97. This is the turning point. So if you want to take a short, be careful until we see this one has been penetrated. And look where is the CL dancing around with. It's dancing around that number. It's to the tick, folks. It's to the damn tick. The same story is on the ES. And once we trying to see if we have a new signal, I will show you all the market is the same story. All the market is the same story. Those three lines, the last stop, before you can make a decision, taking a short or trade. Or if you are an automated trading, we have a lot of automated trading in our system. So you will understand why that auto trade lose that trade or make the most of the auto traders that just want to look at the numbers. Either they are happy or they get aggravated at the end of the day. And they all blamed on an auto trade. No, sir. It is nice to look at numbers, but also it is nice to know where those numbers coming from. You do not just open the cash register and grab money if you are in a shop and not knowing what you're selling today. You will be disaster if you don't understand the inventory. So the same story here. We need to know why that trade made 300 or why that trade lost 300. There is a support line and come into the struggling area, and maybe I should have looked at it. So an auto trade does not mean it's just a donkey going to work and fill up money and coming back. An auto trade means mechanical trading, and it's taking the trades left and right. But at least we have to understand how those trades are taken. If we notice after they lower everybody to go short on the ES, the same story on the CL, the same story on the ES, came into the final destination, the turning point. Look at this and look at this. It's the same story, and none of them should be taken short. And here is your re-entry, and here is your re-entry on your CL. The CL, they are trying to push it down, and now we are waiting to see if they are able to kick it down. And in the meantime, well, it's gonna give us an alarm when we have a new. Let's look at the 30-year Treasury bond. As I remember, we have a trade on 30-year Treasury bond. Let's see where we are on the 30-year Treasury bond. On the 30-year Treasury bond, we're still on that trade. And I believe we had, Okay, where we have, there we go. We're coming to the short trade. We are coming to an entry on the CL. We have a new signal. There we go. We're about to have a new calculation because there we go. This is a new calculation. It's telling you where is the entry and where is the target. It's telling you new signal with an alarm, telling you the entry, telling you the target, and telling you where you need to. And this is beautiful. There is not too many support area, and we have a sell entry, and the automated trade is already calculated for you is 71.63, and it don't seems like anything gonna hold that CL. There we go. Beautiful, beautiful. So I think we have also beside the 30-year treasury bond. I remember we have a gold entry. Okay, we have a gold entry. We have a new signal. Okay, for the gold traders, remember you have three lines, 87, 86, and 86 is going to drive you banana in those areas here. On the CL, we have a target at 71.65. And this is the gold. Oh, yeah, we have the Russell. Let's look at the Russell. We have the Russell. Still struggling the Russell here. Let's look at, okay, we have a new signal, NASDAQ. A new signal, NASDAQ. We have a new signal on the YM. And they're all going to be activated, automated trading. And the system calculate where you need to get out of that trade. So it could be if the market like today, not moving, then the system can calculate it where you need to get out. There we go. You can see we're the only one we are using. There we go. We're done. It's over. I didn't see the number, really. I don't know how much it was. But it's done. It's over. We took that trade. We closed it. And it is over. Let's look at gold. Okay, as I said on the gold, you have three numbers here, your support. Those are your $35 zone. And you're going to be struggling on 87, which we did. We're going to be struggling on 86.9. And the last struggle, it will be 86.6. And then direct target, you have two target, 12.86. Or if you are an aggressive one, 12.84. One thing, again, I want to show you that once we hit this target on the automated trading, we have not missed anything. So if we notice on the target, after we hit the target, I don't know, it was a couple of $300. I didn't pay attention to it. It was very fast. But did we miss anything? So the system is doing all the calculation, is entering the market for you. And look at this one, guys. It's right in front of you. Again, the same story between those two yellow lines. And we have the reversal. Those reversal are not repaint reversal. And look at this. After we hit the target, what did we miss? We missed nothing. So the automated trade calculated. You don't have to click on any bars, highs, and lows, or anything like that. We entered the market. We hit the target. It's done for today, and it is over. Look at this. On the gold, we are on the second bumper. And now we have the final bumper is at 86.6. Once we penetrate the 86.6, there is nothing left except going driving home with 86 level, followed by major support. Final destination is right there. We have a new signal on the ES, and the system calculate the ES. On the ES, you have to be careful with the ES. You have a major support line at 24.75. And there is a sellers. And so it's going to stop at 24.75 a bit. And then it all depends on the seller. So let's go back to the CL. It doesn't matter how much money it makes, each one of them. Here is again the two yellow lines is telling us, be careful, no more short trade. And this is a 1 minute. It's telling us no more short trade. This is a dangerous area to take a short trade. The sellers might push it down. I don't know what they're thinking. Even if they push it down, is they going to be pushing it around that area or the max around that area? But it's nothing. Look at this. Look at the ES. Look. Even it's an automated traded, but we want to know why this retracement, or we want to know why that reversal is there. And you can see, like a clock, again, and again. We've been 2 hours non-stop, and you can see the system again and again is telling us the same story on every single instrument. Here is your CL is reversing. We hit the target. We took the automated trading. It hit the target. It's telling us you are in a critical area. So what did we miss out of the CL? Nothing. We maximize the profit on the CL. We get out, and all what we see is noises. We are not interested in the noises. Again, let me go back on the ES. Where is the stop? We said before ahead of time where the struggling is going to be. Is going to be at 27, 24.50. Those are your $35 zone, which they are the best investment you ever can get in this business. It's the best $35 you will ever spend. So we knew when the auto trade has took the short trade, we're gonna be struggling on the 27, 24, 75 to the tick. We are dealing on ticks. We are not dealing plus minus 1 point. So if we notice right now, we are on a short trade. I'm panicking. We can see the sellers over the buyers, the institutional, the retailers. We can see the sellers over the buyers. We have a signal here is telling us, is calculating all your MACDs, ATRs, volatility, all of them combined in one signal. This is a total independent. And then you have two different market analyzer. I don't think so. You can see that on the YouTube. It's a bit fuzzy probably. It's 1 minute, 10 minutes, 3 minutes, and 5 minutes, and 30 minutes. And it's telling you where is the momentum. The momentum in the market is very important. It's like the pressure in your tire. We need to know the pressure in the market. So I don't want to go through technical things. We're going to keep it simplified so we can see the CL took that trade and nothing has happened. Let's go back on the 30-year Treasury bond. We've been forever on that trade, and we still is a drag and is coming exactly to the re-entry, and we've been on that trade. I don't know, I give up. Also on the Russell, we've been on the same trade. I normally do not sit forever on a trade because I get bored with it and it makes me nervous. So for the last 2 hours, we've been on the same entry and the same signal, and it's going up to 300 and going back to 250 and 300. Sometimes just for this aggravation, I prefer to close it and get it over with because being in the market is a very stressful. Let's look at the YM. If the YM took that trade, Okay, we have a YM, we have a new signal somewhere. Okay, we have also a trade on the YM. Look at this one here. In case if we closed ahead of time, I don't know if this market moving now or not, but for the YM trader, this is a very, very, very cheap trade. One thing's here, let me explain to you. We have a double support line and a three, actually. This is a very, very thick wall. We have a short entry and we have a target, fine. But we have a very major area here. So if you wanted to, on a sim, you want to try that, try to reverse the market on a sim at 247.13, because it is almost is almost 90% this market will be projecting from the 47.13 is almost 90%. What is your target? Right there. It's not the most important when to enter the market. Also, we need to know the destination. Your destination for that trade, if you are entering 24.17, you should be getting out long, of course, not short, long, and you should be getting out around 47.56, somewhere around that area. Let's go back on the gold to see if there's anything happened to the gold. Nothing. We're still going in a circle. So the last signal was the CL. And if we notice, especially the automated trading, after we took that trade on the CL, it was the last signal. We knocked out that trade at the target. If we notice, nothing happened to the CL. So that tells us that in any given day, whether you are manual or automated, normally in the market, there is 4, 5, on a good day, 8 trades are tradable, and the rest are junk. There is no beef in them. There is nothing in them. That guy is keep automating. If your auto trade made that target, you should not keep booking the market and trying to test your luck with it, because if you are unaware of the situation like here, that can get you trouble, whether you are automated or manual. That can get you in a lot of trouble when you don't know, when the market getting stuck in a channel, or when there is some turbulence in there. You cannot recognize this is a disaster trading. So we cannot shoot in the air, but at least we can look at the chart. It's a very simple 3 lines and a yellow lines. We have to look at those 3 lines and say, you know what, it is enough. Once it hit the target, maybe now I'll tell it to go long only or short only. For the traders are interested in that. I don't see. Let's go back on the ES. Okay, look at this. We have predict the ES. We said on the ES, before we hit the target, before we enter the market, I said we're gonna have a turbulence at 27.24.75, and that is exactly the problem right now with the ES. We're trying to penetrate that number, and the minute we penetrate that number, we are going directly. You need to get out of that trade at 21.75, right there. You need, if you are doing manual trade, try to take it out at 21.75. The reason I'm taking it a couple ticks above the automated trading, because I see a major support line at 21.50. The automated trading wanted to get out at 21.25. Fair enough. But I'm willing to give up a few ticks and take it a little bit above the target where the automated has set it up, because sometimes it will be nicer. This is a big chunk of money. Okay, we have a new signal on the gold, a new signal on the gold. You can see the entry signal, the price, and the target, and it just took that trade, and the automated, it just took that trade. Let's look at the YM. Okay. This is where I told you you need to reverse the market at 47.15. And look at this. It's going to go down. Let's take the ES on a different direction. Okay, it is a huge drop on the YM. It's a huge drop on the YM. There is nothing holding the YM, folks. Nothing. There we go. It's a straight shoot down. You need to close position at this one here. And then not to just closing position. The auto trade set the target a little bit high. That's very fine. This is here closing position and open position. What does that mean? If you are short on that trade, take one more. This is not unusual to do, but if you are an amateur trader, maybe you've never done it. When you see double support line and you have something to back up to lean on, it's not unusual to take advantage, close opening position, because it is like a clock. When I have a double support or a double resistance, and this one here has 3 actually, that indicate is going to be projected from those numbers. I cannot say 100%, 90%. So mark me on it, put it on a sim, please. We're not responsible for your live trade. It's a free education. The support line is at 47.12. So what we are doing, we are closing position, opening position. The auto trade taking that trade is going to close somewhere around there. But I'm going to reverse this market, closing and opening position, and then we are selling it somewhere around 47.58. 47.58. We have a new signal on the 6E. A new signal on the 6E. Let's look at the gold. ES. Okay, finally the ES penetrating those numbers. Look at this, the same story on the ES, folks. If you are taking a short on the ES, please get out of that trade at 21.75. And also you can reverse the ES at that number. Absolutely. The reason is also we are experiencing double support plus target. The target is a very serious number. And so if we're looking at it at the bigger picture on the ES, if we notice the first break was on the support line, and we broke that support line, and now we are hammering down to that area 21.50. Then we have the target and then a support line. So that tells me that if I'm short on that trade, I will close position at 21.75 and reopen a new position at 21.75. I'm not trying to confuse you. Just I don't want to be advanced trader on a YouTube, but once you get to know the rhythm in the market after all those years, you'll find out there is no one's rules here. It's not my rules. It is the market rules. So it's irrelevant, my rules, and the market care less about your rules and my rules and all the nonsense. But I am going to stay longer to prove my point. I hope this market is going to be dropping because really I'm dying for a nice cup of coffee. Okay. Look at this market, folks. You can see how the ES, those are from your $35 zone. And you have a double support line, and you have the target, the automated, put it right between those two support lines. So I will not, I mean, I consider myself a little bit more advanced than an auto trade. So I will take that trade at 21.75, reverse it at 21.75. What else we have? We have, I think, we have the YM, we have the ES, and oh yeah, the gold. Let me look what's going on in the gold. The gold, look at this. Look, right at the resistance line. Right there. Right at the resistance line. Okay, let's go back. I don't want to miss out on the YM and the ES. So this is the most tradable instruments. So we're going to stay here for a while. You can see where the ES is struggling. We know why the ES is struggling in this area. Oh, come on, sellers, push this market down. At the moment, based on one contract, we have 239 ticks. And this is based on one contract, 2286. And this is really, really lousy day today. I mean, oh, okay, we have a new signal on the British US dollar, right under the gray line. Here is your entry point, 519, and then your target is 36.5, and it is, sorry, yeah, I'm starting getting tired. It's a buy signal, and right above the gray line. Okay. For the euro dollar, let's look at the 6E. I think we have an entry on the 6E. Okay. On the 6E, we have an entry also. Folks, it doesn't seem like it's going to go down. I gave you the numbers, so I hope you follow those numbers. But I've been over 2.5 hours, and I really like to use a little small break. I hope it was educational for you, and I will try my best to try to open your eye on the market. And we are doing this free education We are not holding. Please do not hold us responsible for any of your trade. It's just an educational purpose. If you get benefits out of it, that makes me happy. We are not expecting anything in return. So if this one can save one trader a day, that makes me happy from getting in trouble. Folks, there is nothing left. It's over. Now it's just 12:12 lunchtime. So I'm going to be calling it off. God bless you all. And I will try my best to come online as often as I can. Bye for now.